Good morning, everybody. Hey, welcome to Thursday. It's Jobs Day today on October 15th. I'm glad you're able to join us today as we get ready to talk today. But remember what I asked yesterday, actually. When or what do you think we should name this little bit that we have with Dave? All you have to do is send your answer to Statler Financial at gmail.com. I'd really like to get some input on what we could call this little segment every morning with Dave on 105.7 Light FM. So looking forward to your comments as we get ready to start today. Jobs numbers in. Looking forward to our conversation with Dave as the markets are heading south this morning.
Light FM. The host and now award show hostess too, Kelly Clarkson there. It's 8:40 now, 20 before 9. Let's check in and find out what Wall Street's doing to your money. Yesterday was, honest to gosh, not a particularly happy day on Wall Street. Let's find out what caused the unhappiness and go downtown to the offices of Statler Financial Services. Philip Statler standing by. Philip, good morning. How are you this morning?
Good morning, Dave. Hey, doing well today. The markets, however, not so well yesterday or today heading out. I mean, this could be, the third day if we continue on this track record, which, let's face it, is not good.
No. We got a bad case of the crabbies yesterday on the markets. The Dow was down 166 points. NASDAQ down 95. Standard & Poor's down about 23. And I asked you before we went on the air as to what your sources were saying the cause of it is, because pretty much things were relatively routine yesterday. And we're all thinking right now that it's as much as anything cynicism over Congress. They aren't going to give us a stimulus plan, right?
That is definitely what I'm seeing across the board is that, I mean, even the CEO of Walmart came out and said, specifically to Congress, you've got to get a deal done. This country needs a stimulus package. And so that tells me they need to get off their duff and get something done. And I just don't know that it's going to happen.
And it was interesting enough when the Federal Reserve Chairman said, we're doing everything we can, it's about Congress's turn, when one of the biggest publicly traded companies in the nation goes on public record and saying, Congress, where are you? That kind of gets investors' notice, doesn't it?
I believe it does, and especially the traders, right? Because this is how they make their livelihood, is buying and selling. And so I think it's definitely got their attention, and the long haul investor, they can handle the ups and downs, but the traders, this is their livelihood.
Oh, yeah. You got to keep in mind there's a big difference between the guys that throw gobs of money around every day and those of us that have a retirement account that we put the money in and let it sit there until we retire. Yeah, the strategy changes as you get closer. But we're talking about market changes driven by guys that throw millions and millions of dollars around day by day trying to catch the peaks and avoid the valleys and buy on the valleys and everything. They're looking at it day by day. And one big company saying, hey, we're in trouble. That almost sounded like a guidance statement out of Walmart, didn't it?
Well, I didn't read the report, so I'm not sure how much guidance was built into there, other than if the CEO is really looking at the whole economic standpoint and saying, look, the people need this, and let's get it done.
No, I suspect so. We start the morning out, speaking of guidance and information, with kind of a mixed bag of reports out of the federal government. Thursday's our usual day. We get first-time unemployment claims. That was up from last week by a little bit. 898,000 first-time unemployment claims, and the market expected a bit better than that, didn't they?
They did. They expected it to be. I mean, I had one analyst is at 824,000. CNBC had it at 830,000. In any case, it was more first-time jobless claims than it was expected. And I actually even saw a headline that said it's the biggest increase we've had since August.
Yeah. That's not what you want to hear. The other side of the coin, though, was good news out of the continuing claims number, because we went down by 1.7 million continuing claims. Putting people back to work is always good news. Continuing claims in the country at 10 million, and the market was expecting more than that. So we kind of have a wash as far as unemployment.
We do, and so I mean, let's face it. For how many weeks did we have a million plus first time claims, and we're below that number. I feel like that if we do inch back up over that million first time claims, that will not be a good sign.
I suspect that's going to be a psychological number, I would imagine. Two Federal Reserve banks put out their regional indexes, and just to keep the split vote going this morning, they went in opposite directions. The Philly Fed's manufacturing index went way up. Now, again, these calculations mean very little. But the number itself and the direction it's going does. Went up from like 15 to 32.3. Market expected it to actually go down, so that was a beat by like a 3-1 margin. And then the New York Fed put their number out. I didn't have the number, but I know it declined this month. So I don't know what Wall Street's going to make of those two anecdotal figures either.
I don't know. They're really paying much attention to those. I think the jobs number, the stimulus issue, the coronavirus. I mean, we've had two companies now that have basically suspended their testing until they can figure out what went wrong. And so I think those things just kind of keep stair-stepping on top of each other and giving traders and giving investors more uncertainty than what they want.
Absolutely. And as we've always repeated over and over again, uncertainty is the one thing that Wall Street doesn't like. We got some certainty because we're starting earnings season, and we had one more big financial report this morning, didn't we?
Well, we had a couple big. I mean, well, that's right. This is one of the last financials really to report. Morgan Stanley came out, and they did better than expected, pretty significantly. They were helped by an 11% jump in their investment banking revenue. Their revenue came in ahead of projections. When I looked earlier, they were trading down. They're still trading down 1.2%. They were even up over last year, third quarter. So I'm not sure what's driving them down. I didn't see anything in any of the reports I saw, unless it's just, market decline, and they're just getting caught up in that market decline right now.
And you kind of brought the point out that virtually everything seems to be going down, so reporting today probably is not a CFO's dream, is it?
No, definitely not, because the stock prices aren't getting much help, though there's a couple that are bouncing up.
All right. Give me some good news. What came in that was good news this morning?
So everything I have really is pretty much, well, no, the airlines is not good news, but Walgreens reported. Walgreens came in, they beat by 6 cents a share. Revenue was above forecast, and they did something that's good. They increased their dividend by 2.2%. And so they are, at least when I looked earlier, yep, they're still up. They're up about 1% this morning.
That's good news.
That is good news. And they're really trading pretty close to within 10% of their 52-week low right now. So the other one that we have right now is United Airlines. We had Delta yesterday. Yeah, their loss was about kind of pretty close to where Delta's was in terms of per share. They lost $8.16 per share, which was more than was expected by the analyst. Revenue was basically in line with their expectations. They they're trying to get ready to weather this storm and be able to make it through. And they're trading down 1% this morning.
That could be worse given the fact that it's an airline reporting.
Yeah. And here's one of your favorites, because it used to be the first thing that came out, right? Alcoa.
Yes, Alcoa.
They reported, and they were expected to lose $1.38 a share, and they only lost $1.17 a share. They're the big producers of aluminum products. They are they're having some issues producing that. They're down significantly today. They're down 7.5%, Dave.
Given so much of their stuff ends up as a consumer product, that does not sound good, even though they beat the street, I gather. Huh?
Yeah.
Oh, well.
So this one probably is a sleeper for you, but it's got to be on your big winners list if it's anywhere, and that's Sleep Number beds. Uh, they uh, they had a really good quarter. They beat by a little over 70 cents a share, better than expected. Revenue came in ahead of forecast. They also issued an upbeat outlook for the rest of the year, and so which is unusual for a retailer to go that far out. But they're trading up today 5.7%. And they will actually open, if they open right now, they're bumping up against a 52-week high.
I love it. Good to hear it. And I did hear what you did there, a sleeper stock. Ha ha. Resetting the table for the morning. It was an off day yesterday on Wall Street. Again, just a basic funk over the fact that things aren't moving in Washington, and we didn't have any good news, and mostly just bad news on the coronavirus. 45 minutes before we start this morning, Philip, what are we doing?
So I don't see any green ink, Dave. I see zero across everything you and I talk about every week and every day. We've got the Dow down 1.25%. That's $354. We got the S&P 500 down about 1.3%, which is about 44.5. We got the NASDAQ down 1.6%. That's almost $200 down. And then we switch to the commodity side of things, and it's not any better over there today, Dave. Let's see here, where to go. We got the silver's down below 24. It's down 2.5% this morning. Gold's down 0.5%. Crude oil has dropped below 40 again, down 3.3%, down to 39.65 a barrel.
Well, shucks, I can't add any good news on the world markets either. Asian markets closed down at the close this morning about 6 a.m., and European markets are responding to us by selling off. Both Germany and Great Britain are both off more than 2% halfway through their day. It's worthy of note that while we're in this funk, money has a tendency to go into bonds, and 10-year Treasury bills are down by 3 basis points as of the last time I checked. 30-year Treasury notes are down by 5 basis points, 1.46% for a 30-year Treasury note. Sounds like indications are a good time to look at refinancing a mortgage, doesn't it?
Yeah, it's definitely looking at that again.
Absolutely. Somebody need advice beyond refinancing their mortgage as to basically how to insulate your IRA and 401k from this mess. How do I find you, Philip?
You know, Dave, you and I, we preach a lot about risk because that's the only thing that you can control within your portfolio. And my fear is that not many people out there know exactly how much risk they have in their portfolio. That's why we developed the financial x-ray. And so give us a call and let's x-ray your portfolio to determine if that risk is the right amount of risk for you. Give us a call at 863-382-0037. You can call us. You can go to our website, statlerfinancial.com, and there's a link there where you can schedule a 15-minute phone call. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on Highlands News Talk 730. And it's amazing how fast things change on Saturday Sports Day, doesn't it?
Oh, boy, do they. They've changed the Gator game 3 times this week and then just said to heck with it yesterday and canceled it because, well, the Players got a bug. How are the Seminoles doing anyway? Do they have a coronavirus issue?
Not that I've heard about yet. So they play Saturday, and hopefully it's better than what they did last week.
Oh, gosh, yeah. Well, they don't have to play Notre Dame this week, so that'll be better, won't it?
No, but it's North Carolina, and they're 3-0, so.
I got you. There is a risk. Thank you very much, sir, and we'll catch you tomorrow morning, all right?
All right, have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services, Philip Statler. Wait and...
Hey, folks, again, I want to thank you for joining us today. Remember, I want you to give me a name for this segment. All you have to do is email your suggestions to statlerfinancial@gmail.com. Hey, I'd really appreciate it. Maybe if we don't get much, we'll create a contest. I'll talk to Dave about that. So, hey, have a great day. Again, I look forward to speaking to you again tomorrow as we close out the week.